What's going on, everybody? This is Economic News Insights, and today we're going to talk about how to get your budget and your financial house in order. This is basically financial hygiene. Every once in a while, we've got to modernize our financial approach. This is important to do. Everyone should be doing this if you're not already doing this, but you should get your financial house in order. And I'm going to give you some tips and tricks. I'm not a professional financial advisor, but I am going to give you some tips and tricks that I have applied and some things for you to think about in order to, manage your money more wisely in this era of what I consider to be incredible inflation. We've talked about this on the channel before. Right now, if you've been saving your money in a savings account over the years, it's just lost its purchasing power. If you look at inflation from 2022 to 2025, I mean, cost of living is up 15 to 20%. So if you had $50,000 and you had all that $50,000 just in a savings account, you've lost 15 to 20% of that purchasing power that you would have had in 2022. That's not even going back to 2010 or 2015. So if you're someone who's a retiree or if you're just a young person trying to understand how to navigate the waters, these are things you have to take into consideration. So now, if inflation really slows down and it's not as crazy, then maybe having cash on hand could make sense. But in this era where we've coming out of inflation, you want to be aware of it and you want to be making adjustments. And that's what we're going to talk about in this video. If you're excited about this information, smash up the likes. So you have sticky inflation, you have housing costs going up, car maintenance prices going up. Going to Walgreens is more expensive, going to the grocery store is more expensive. You've got to start taking these things into consideration. So maybe even doing a little bit of bookkeeping so you know how much you're spending, because sometimes you can look at your bank account. Hopefully, you don't get over withdrawn, but that kind of stuff can happen. So, the hidden impact of inflation, your savings are losing value, fixed income, retirees, salary workers, you're not making, you might be making the exact same, but you're paying more. So, these are things that got to be paying attention to. And, if you're not paying attention to it, it can catch up to you. And next thing you know, you're running at a deficit. And we don't want you to be doing that. That's what we're talking about here. So the debt is more expensive because higher interest rates. So if the time comes, if you're in a loan, say you're at 7% car loan or 15% car loan, whatever your car loan rate is, you want to try and have a good credit score so that when the time comes, you can get a really low interest rate, maybe down to 3% on your mortgage or your car loan. That's what I would be hoping for you guys. We'll see what ends up happening. We're not there yet, but these are the steps that you can take. So, budgeting, we're going to talk about that. We're going to talk about saving. We're going to talk about investing. And then we're going to talk about debt. Okay. So, budgeting, we just kind of touched on that, but you need to reevaluate everything: rent, food, and insurance. This way, you're not running at a deficit if you can do it. But use the zero based budgeting 50, 30, 20 with inflation buffers. That's basically the calculation there: 50, 30, 20. So, with saving, you want to be moving the cash to high yield savings. If your bank offers it, try to get a high yield savings account. Okay. See if you can do that. If you're just going to hold the money in there in the bank account, you don't want to keep it in checking, maybe put it into savings. Go to, I don't know, Bank of America or Chase and just tie up that money in one of those 5% APY if they're available. But you always want to keep emergency funds available. They say having about 3 to 6 months is on par with what you want to have. Now, the most important thing that I'm going to talk about here, and this is the one that I really dialed in, is the investing. So this is where I think you guys need to be. You need to be having diversified stocks, bonds, gold, uh, ETFs, Bitcoin. You need to be getting. I'll just tell you what I'm doing right now. I just recently bought some silver. I've been holding Bitcoin. I've been buying stocks. I actually just opened up an IBKR, which is an interactive brokers, which allows me access to China's market. I'm going to be buying BYD, which is an electric car company similar to Tesla, but I'm diversifying like that. I'm diversifying out of the U.S. Market only because some of these markets, they don't move like the U.S. markets do. The U.S. markets, especially a stock like Palantir or Tesla, lots of volatility. I mean, the price action, like with Tesla, is like a Bitcoin. I mean, Bitcoin has a lot of price action. People like price action, But the big thing is buying the dips. So on this day, for example, with the Iran Israel conflict, some people are getting aggressive. They're buying things. Like yesterday, maybe someone was buying Boeing because Boeing stock went down. And then you couple in the fact that there's now this potential for war between Israel and Iran. I mean, this is the time you want to move in when this price goes down. I would say you could dollar cost average in. You don't have to just go all in and buy right now because we don't know how low the market's going to go. I mean, we have been seeing these quick recoveries, like these V shapes, or in some cases I, where it just goes down and comes back up, right? But you know, gold price is up, silver price is down. So, I mean, whenever things are down, especially if they go down significantly the way the market's been, that's a time to buy. So, I'm going to emphasize that. You buy low, you sell high. So, if things are strong in the green, that's not the time to buy. If when others are fearful, that's when you need to be greedy. When others are greedy, that's when you need to be fearful. You get what I'm saying? So that's kind of been like a really good advice that I've always kind of kept in the back of my mind most of the time here. But you want to know what your assets are, you want to know what your liabilities are. Basically, you want to buy things that buy things. Does that make sense? Buy things that buy things. So if you buy the BlackRock ETF, you're buying the BlackRock ETF for Bitcoin because they're buying Bitcoin. You get what I'm saying? So BlackRock's known to buy things, or you don't want to be wasting your money on things that are basically just, I don't know, frivolous items. I know some people like to buy jewelry, they like to buy earrings, they like to buy handbags, they like to buy sports cars. But the truth is, if it's not making you money, it's losing you money, and that's draining your account. And right now, in this day and age, you need to be a bit more frugal and you need to pay attention to your money. And so you need to look at your assets versus your liabilities. And that's kind of how we need to be dialing this in. And so I just wanted to put this video out there, give you guys some ideas, food for thought about how you can be managing your bank account and your financial house in this day and age. But the most important thing is, you need to keep learning. This is an ever evolving economy. You know, they say AI is coming. I don't know if it's a bubble or if it's going to really happen. I mean, we've seen this with a lot of things. They always like to hype things up. There's a lot of venture capital that goes into it, there's a lot of investment that goes into it. And then we're kind of just waiting. And, if AI does take off, that's going to destabilize the whole economy. And you need to be learning and staying on top of that, whether it be reading books, listening to podcasts, listening to this channel as we continue to stay on top of things. I mean, right now we're kind of going downstream. I don't know if you guys have ever gone downstream, whether it be whitewater rafting or anything, but you're going downstream and then all of a sudden it gets a little choppy, it gets a little exciting, and then it slows down again. That's kind of what we have going on with the market. But at the end of the day, you want to end up at your destination with all 10 toes, all 10 fingers. You want to get there probably as dry as you can if possible. But, that's why you got to keep learning, but you got to pay attention because that's what we're in. I mean, this financial market, a lot of people are in debt. I mean, it's crazy. I don't know why more people are not demanding financial education, financial literacy. This stuff is so important, but you need to be making goals. You need to be making 5-year plans. You need to be making 10-year plans. You need to be making 1-year plans. I always say take a short-term plan. Okay. So take a 6-month to a year plan, but you also have the 5-year plan. Okay. So the 5-year plan is first, and then you just come up with that 5-year plan in place. You say, okay, how am I going to get, where am I going to be at in 6 months? Where am I going to be at in a year? So you have short term planning, long term planning. But the first thing you need to put in place is that long term plan so that you know where you're going. It's like if you're driving from Phoenix to New York, you know that the next stop along the way is going to be Albuquerque. And then from Albuquerque, the next stop is going to be Oklahoma City, right? So those are the short-term plans, but the long-term plan is getting to New York City. So it's like the long-term plan is to get to $1 million. Let's just say that's your goal, right? I hope that's your goal because in this day and age, $1 million is not too far out of your reach. But you can get to $1 million and you say, okay, in the next 5 years, I want to be at $1 million. How do I get from, I don't know, some of you might be in debt. That's okay. I was in debt too. You could get to say $25,000 savings. So how do you get to $25,000 savings? That's your first one. After that, it might be 50,000. After that, it might be 100,000. From there, it might be half a mil. And then you get to a million in, a year, or I mean, sorry, 5 years. But this is the line, this is the frame of mind that you want to be following. Long-term plan, short-term plans to get there. And if you do that, you'd be surprised at how often you'll be hitting your goals. I mean, you know, I've always said have 5 streams of income coming into your bank account. That's kind of the way I like to roll. So stick with this plan, see what happens. And thanks to everyone who smashes up the likes. And we will see you all on the next one. Hopefully, this video was helpful. Bye bye.